Hey traders, it's Melissa with Price Plan Profit. It's Tuesday, which means it is that time of the week where I am going to break down one trade that I nailed and another that didn't work out. More importantly, though, I want to show you what I learned from both. So let's get started. I want to start with the winning trade this week. This is a trade that I took on TEM on June the 10th. You can see that in the morning, price just chopped around the PMZ zone, but we did come down and test this area of support where I set my stop loss. And because the support held, once price crossed back above the PMZ or pre-market zone, which is my favorite indicator to use for day trading, I entered the trade. I chose at the money calls expiring June 13th, and I bought those for $2.50 a contract. Then exited towards the end of the day as price came into my target zone, and I was able to close those out for $4 a contract, which means a profit of $150 on each contract. By focusing on this bullish momentum stock and waiting for my entry to trigger, I booked nice profits with little to no stress. Now let's talk about the losing trade. On the very same day, you can see here, June the 10th, I entered a bullish trade on a trending stock that had been trending to the upside. GE pulled back to my buy zone, so I bought the $245 calls expiring June 20th. You can see that on the day that I bought those calls, my buy zone held as support, and then the following day we actually had what appeared to be bullish momentum had returned. Well, guess what? I woke up the next day and news had come out, very devastating news that an Air India flight had crashed. And if you didn't know, GE is the manufacturer of the engines in that Boeing plane. And GE took a hit on that news. And so on the 12th of June, I was stopped out of the position. I entered the position for $7.60 or $760, and I closed on this stop out below my zone for $4.25. Now, what are some lessons and takeaways that I can share with you this week? Not every buy zone is going to work. Unexpected news can make even the best laid out plan fail. We need to respect our plan and take a stop at the stop loss levels, as well as, like on the winning trade, take a win at the profit levels. Also, one thing I want to point out is that I went into the week knowing that the S&P 500 was at supply, and starting new bullish swing trades was risky. It is in these moments that traders lose the most money. Right at supply is typically when everyone starts feeling bullish and they pile into calls. I would challenge you, though, that when you start feeling euphoria, shift your focus to day trading until the overall market either works its way through supply or we get a pullback to demand. Maybe you trade off key moving averages or key Fibonacci levels. The point being, is that when we are anticipating making new all-time highs, very likely price is at an area of supply or an area of resistance. And if you feel euphoric, try shifting your i- focus on day trades rather than piling into a bunch of swing trades to the upside. So, if you want to learn more about how to read the market using supply and demand, please take advantage of the 30-day trial to the Trendy Trading Room at Simpler Trading. It's only $7. And of course, keep an eye out for more videos to help you become a more structured, disciplined, and consistent trader. Be sure to subscribe to the channel so that you're notified of new videos. And please, please, please like this video and comment a valuable lesson that you learned in your trading recently. I'll see you in the next video.